What is going on, investors? My name is Emmanuel, and Cathie Woods, ARK Invest, they have wasted no time in starting their Coinbase position. I personally am waiting for more dips, but they went straight in at the get-go and they started loading up. Now, this is for very good reason, because Cathie Wood was recently on Bloomberg and she gave us some great insight into Coinbase. She highlighted why she thinks the value of Coinbase will appreciate over time. And she did also highlight some key risks that she sees with Coinbase in the short to medium term. So in this video, I want to break down some of the pros and cons that Cathie Wood has identified with regards to investing in Coinbase. And then lastly, I'll be telling you what I will be doing with Coinbase myself. Now, before we dive into all of that, make sure you smash the like button. If you're new to the channel, hit the subscribe button and the notification bell to stay up to date with all of my latest videos. If you do want to join my Discord group, where we've been having some great conversations about Coinbase since their earnings call last week, then you can do so by joining through Patreon, and the link is in the description below. So with that said, let's dive into it. So before we go into what Cathie Wood said regarding Coinbase, let's take a look at their position. So they purchased just over 89,000 in the ARKF fund, and that weighs about 0.7% of that entire fund. It's not a large position by any means necessary. It actually feels like it's a bit of a filler position. Now, I do that sometimes if it's a company that I like, but I don't necessarily like the valuations. I do buy a small amount of shares just to keep my interest, and I can continue to follow the company. And if the volatility presents better buying opportunities, then I will load up some more. So it seems like this is what Cathie Woods and ARK Invest are currently doing with their Coinbase position. And in the ARKK fund, they picked up just over 500,000 shares, and that also weighs about 0.7% of their ARKK fund. And also in the ARKW fund, they picked up over 147,000 shares of Coinbase stock. And again, that also weighs 0.7% of that fund's holding. So across all three funds, it weighs about 0.7% in their respective fund. And I do believe we're going to see them buying a lot more Coinbase stock as the volatility of the share price continues. Now, in pre-market, Coinbase right now is up 7%. There's a lot of speculation with regards to what price it would open up, and it was eventually available for us retail investors at $380 a share. And the price quickly went ham. It went to highs of $429, only for investors to think, yo, this valuation makes no sense. I mean, at one point, the market cap exceeded 100 billion, which is just ridiculous in my opinion. As much as I'm bullish on the company, 100 billion market cap, I'm sorry, no, that's not for me. And I think reality finally sets in, and then the price pretty much tanked. I mean, it tanks to lows of $310 a share, only for it to rebound slightly towards power hour, and the price closed at $328 a share. So as I'm recording this in pre-market, it's dropped even lower. It's now up only 6%. So there's a bit of a sell-off going on in pre-market. It will be very interesting to see if the price of Coinbase drops below $300 a share. That's when I personally would start to get very interested in Coinbase. At yesterday's market close, the market cap was sitting just over 61 billion, and I think these valuations are starting to become quite interesting. Now, let's move on to what Cathie Wood said.
Now, there are a lot of assumptions in there, and you want to talk about volatility, just look at a chart of Bitcoin. There's going to be there are going to be great opportunities between now and 5 years to buy on dips, we believe.
So one of the first things that Cathie Wood pointed out was that they believe that they're going to see a lot of dip buying opportunities, and that's due to the incredible amount of volatility in the share price of Coinbase. And as we've already seen from day one, it was incredibly volatile, opening up at $380, going to highs of almost $430, only to reach lows of $310 to then close at about $320. So yesterday was incredibly volatile, and Cathie Woods was spot on with that. And it wouldn't surprise me if they continue loading up on Coinbase as the volatility continues, because Peter Lynch actually is a huge fan of volatility. Peter Lynch has said many times in the past that volatility is your friend as a shareholder, and I personally agree. I like volatility, and the reason why I didn't even start a position in Coinbase when it opened was because of volatility. And I'm hoping for volatility to push the share price even lower to possibly less than $300 a share, which would be incredible.
We do believe, however, that it has miles to go because institutional interest in Bitcoin alone, which is the largest cryptocurrency out there, is, we think, going to add up to $500,000 to the price of Bitcoin. And when I say that, we've based this on a study focusing on what institutions are looking for. They're looking for low correlations of returns. This is a new asset class. So institutions are interested, they are moving in, and if they add up to 5% in their asset allocation to Bitcoin, that alone could be up to a $500,000 increase in the price. So we're at the very beginning of what we believe is going to be a long and exciting journey.
Now, another point that she made, right, in relation to the value of Coinbase, she directly related it to Bitcoin, and she said that institutions are interested in Bitcoin, and she said that institutional interest alone will add up to $500,000 to the price of Bitcoin. And her justification for that statement is that institutions are looking for low correlation of returns. And I can't argue with her in that point either, because JP Morgan recently came out and said investors can allocate up to 1% of their portfolios to Bitcoin. And I think large institutions will take that advice on board. We've also got the likes of Tesla, who earlier this year have now allocated a certain amount of Bitcoin onto their balance sheet. And I think other large corporations and blue chips will also start to consider, if they haven't already, adding Bitcoin to their balance sheet. So it's very good to see. I have about 7% of my investing portfolio in Bitcoin and also Ethereum. And I will not argue with Cathie Wood's statement and their research there. Now, assuming Cathie Woods is correct, okay, which we're already starting to see evidence that she is, and more institutions and blue chips start to add Bitcoin to their balance sheet, then this will have a significantly huge impact on the top and bottom line for Coinbase. And one thing that investors love to see is growing revenues and growing earnings, okay? And if Coinbase delivers this, then this is going to attract more interest from more shareholders in the long term.
Okay, let me see if I can prod you a little bit more to give us specifics on a price target for Coinbase. You're reticent to maybe give us a number, but can you give me a ballpark on the percent gains that you think you could see, using your 5-year approach?
This is well above our minimum hurdle rate of return of $15, even if it does open. I mean, 15% per year, even if it does open as high as $250 or $300, even at those prices, given our assumptions. Now, again, we expect tremendous volatility in this. It's going to be unstable in terms of investors and analysts understanding what Coinbase actually is. It makes most of its money on the trading of Bitcoin and Ether. Those are the two biggest, and it's going into a lot of other cryptocurrencies and crypto assets. So it's got a lot of open-ended opportunities, but right now they're making about 70 basis points on each trade, on each dollar traded, and we think there will be fee compression, as there always is in the institutional world, and as competition increases. So I think the opportunities in this stock, to the extent there are dips out there, will come around the idea of, oh my goodness, how much is competition going to drive these fees down? And we do think the compression will be to 50 cents within the next 5 years, or 50 basis points. So you'll watch the dynamic. Volume explosion, fee compression. Again, we'll pick our spots around volatility.
Now, the main risk to Coinbase that Cathie Wood identified is competition. So she mentioned about fee compression, and she said that fee compression will be a factor, as there always is with an increase in competition. And this is very true, because all you have to do is look at the stock brokerage companies, your Interactive Brokers, your Fidelities, your E-Trades, your IG Markets, your Trading 212s. The more competition there is from the likes of Robinhood, your Trading 212s, who are pretty much bringing in zero commissions, they're now forcing the likes of interactive brokers, putting them in a position where they have to reduce their fees to be able to attract more users to their platform. And I can see this also working its way into the crypto space, because the large majority of Coinbase's revenue is from the fees, which is why they have very impressive margins. But as more competition comes into the space and offers investors with lower fees, Coinbase will have to reduce their fees. Now, I shared this with my Discord members just yesterday. Coinbase can flex right now. They can charge crazy fees because they have the largest market share. But one of the things we were saying in our Discord is if Binance can streamline their platform. I personally use Binance now because their fees are a little bit cheaper than Coinbase. And if Binance can clean up their platform, streamline it, make it more investor friendly like Coinbase, then I see more users switching over to Binance, and that will lead to an increase in assets under management on the Binance platform. So this is a major threat to Coinbase. I mean, can you just imagine if another platform comes out and they say they are offering 0 commissions for buying and selling of crypto, and their platform is just as nice, if not better, than Coinbase's? I mean, retail investors are going to flock to that new platform. And I can almost guarantee you there are companies right now working on this as we speak. So this will have a major impact on Coinbase's top line. And this is a huge concern to have if you are considering investing in Coinbase. And it's also a reservation that I have as well going forward. So with all that we've said, what will I be doing? Now, personally, I don't have that much high conviction in Coinbase as a company, so I do not plan to invest right now, and I'm opting to keep my money in Bitcoin and Ethereum. Now, if the valuations for Coinbase gets silly, so for example, if the market cap drops below 50 billion, then I would probably start a small position, because I am bullish on this company long term, because I am bullish on Bitcoin and crypto and the whole crypto space long term. But I don't think Coinbase's moat is that strong, and I do believe it's only a matter of time before we see other platforms come along and offer 0 commission crypto trading and investing. And that will be detrimental to Coinbase's top and bottom line, in my opinion. So those are my thoughts. Comment below what you think. Have you started a position in Coinbase? Are you waiting for the price to get cheaper? Whatever it is, comment below, let me know. Remember, none of this is financial advice. I am not a financial advisor. So please view my content for educational purposes only. If you enjoyed today's video, make sure you smash the like button, hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching, and I'll catch you in the next one. Peace.